To the agro space then, where the chana futures have declined to a contract low today due to rising supplies from the new season crop amid weak demand from the millers as well. There you have it on your screens. 0.25% down is how that one has shut sharp. India, in the meanwhile, is considering allowing additional wheat exports to cut huge stocks at the government warehouses and make room for the new season's harvest, the Food Minister K.V. Thomas said today. Last year, the wheat production rose to an all-time high of 93.90 million tons, while the consumption has stayed at the same, around 76 million tons a year. India has turned into a net importer for sugar as well for the first time in 2 years, despite surplus stocks at home, as global prices have slumped, prompting the millers to demand an increase in the import tax to curb cheap overseas supplies. On that, the minister said that they will wait until February to see the production for this year before taking any steps in sense of import duties. The pepper market, in the meanwhile, is experiencing a tight supply situation and the prices have been moving up. The availability of spot pepper in the physical market is thin, and that has pushed the prices up in the previous week. And today you're looking at very steady flat trades coming in, 0.1% of a decline on your screens. But it's the strong rupee which is denting the appetite for soy oil as well. Profit-taking has hit the commodity, but export demand for soy meal is something that has been helping the soybean prices gain in the trade today. Nirav Desai at Nikhil Link now joins us on a phone line from Indore to throw some more light on the same. Nirav, hi, how have you seen the prices? We've seen soy oil prices see continuous decline into the markets. And also, how are you reading this new weather change, rains in most part of North India? How is that impacting the whole thing?
See, coming to the soybean situation here, soybean from today, that's February month to March, April is a different scenario. And June, July, August is a different scenario. For nearby, Argentina and Brazil might have certain logistics problems, and some nearby demand coverage can be there to India, from India. And I think the kind of export numbers or trades that are happening for February shipment show that February, March, even some April export numbers would be good, which would in turn help the soybean prices. And soybean prices for March contract and April contract can further go up, because the farmer will not be very interested to sell the beans very fast, because the Rabi harvest will start from the next week or maybe another 2-3 weeks. And they'll be first selling wheat and then they'll think of the beans. So I think beans overall seems to be supportive. Coming to soya oil, I think yes, first we talk about the weather. Weather in North India, there is some cloudy weather and some rains happening here or there. But because the temperatures have risen, so we think hailstorms would not happen much. So overall, there is no major negative impact on the mustard crop. And so this will not help the market much to rally. And on the other end, the nearby bean oil supply is not very great. And so the inversion causes some, you can say, short covering speeds whenever the forward months become nearby.
Sure.
I think that has happened a lot. But overall, the palm prices on the forward in March, April, with summer months setting in, the spreads between bean oil and palm are really pressurizing bean oil. So I think once we have a clear summer setting in, it will be difficult for the bean oil to really keep on the higher prices.
Sure. So, Nirav, what's your sense on the prices then? How do you look at the soy oil and the soybean prices for the near term?
Soybean, I feel dip is good to buy. It's going to be supportive because farmer will not be interested to sell. Argentinian weather issues might trigger some buying spree from the nearby destinations. For soybean oil, I think maybe another week or so, market may remain firm at current levels, but I don't think can rally much. But maybe a week or 2 weeks later, soybean prices will have to go down, because eventually the differential between palm and soya oil in India and the summer months coming, I think there's going to be historic difference, and a lot of bean oil demand will shift to palm oil once summer months set in.
All right, Nirav, your point is well taken. Thank you so much for taking time out for us. So some consolidation, support and buying on dips is the view coming in from the industry. Vijay would want to pull your attention to the spices really, because turmeric and cardamom are two spaces where we have seen good gains coming in, nearly 3% up on cardamom and an upper circuit on turmeric yet again.
Manisha, we spoke about this last week, and I said I'm bullish on the food space, whether you call them grains or you call on pulses or even spices. This trajectory is likely to continue. Even if you are seeing a little bit of weakness in chana or sugar in the absolute near term, as the temperature heats up, my guess is a whole lot of these agri-commodities will start going up, barring, of course, edible oils, which cyclically tend to fall in the summer months along with mentha oil. So I think I'm not really very surprised the way the cardamom is going up, because normally what you see is the harvest once a year in the end of the calendar year. And the new calendar year normally lives off on the previous December's harvest. And my indications are that the cardamom is likely to firm up even from here. I would not really be surprised to see a breach of 1120, 1140 band. Of course, it's not going to be a one-way move. Possibly there might be some interspersed technical corrections, but there's still way up headroom on the upsides.
All right, so good gains coming in for spices, not so much for sugar though, nearly 1% of a decline for that one today. Shrikant, what kind of levels are you looking?
Technically, I think it should take support here, because it had a resistance at this about 3,000 levels earlier on, and then it broke out of that, went up to about 3,600. That's when the euphoria was there that, it will go up to 40 and things like that. But it's backed off now and it's come to this correction. The problem that actually is the Indian millers are facing in terms of pricing is also that Pakistan sugar is pretty cheap, and even though exports are allowed, a lot of the Pakistani sugar has already gone and flooded areas like Sri Lanka and other countries, which were the areas that India is to export to. So having blocked that off, the suppliers are stuck in the country, and without the import duty, even the Pakistani sugar that's coming into Punjab and things like that has created a situation of excess of supply, that also in a month when the demand is pretty low. I think that if you look at it fundamentally as well as technically, maybe that this is the time that it might bottom out, because if you're looking at Feb, then you look at March, where the demand normally picks up in the soft drink area. So if that happens, then maybe this could be the bottom. But I doubt it will break this support. I mean, it shouldn't, given the prices of what the mills are actually paying in terms of crushing and for cane. So but I think it will unfold in the next couple of weeks. We should have an idea by then.
Sure. So as of now, 3,000 coming in as in lower support for sugar. Shrikant, also, how would you look at chana? Because there has been a considerable decline into that one as well. It hit a contract low yet again into the markets today. Are you looking at further sell call on this?
Yes, I would in fact look at not only selling it, I would also look at selling it on a small rally if it manages to do a correction right up to the 3450 levels, or the 3500 which we were looking at earlier, which was a major support. You have the arrivals now, I think, from MP coming in during the month of Feb. The other arrivals have already started coming in, and you still have some more for this whole month for it to come in. That's going to add a lot of pressure to chana, and looking at that, I think that you will see declines, and you should see it. I mean, like I said earlier on, more than on trade to trade basis, if I were to give a number on the downside, I would probably look at 3,000 is where chana should actually reach.